Hey everyone, Taz here from Zag's Accounting Solutions. A lot of you know that electing to be an S Corp can provide tax savings. I know you may have heard this somewhere. Today I'm going to go through a hypothetical situation with actual numbers that show how exactly electing to be an S Corp can save your business thousands in taxes. We'll go through a full calculation for a company making 300K in profit and with the owner taking home 100K in salary, right? Just to keep the numbers simple. So I think this will be really helpful to kind of see what the actual numbers look like. All right, so let's dive right in. So let's understand first why S corps can be beneficial for tax purposes. So unlike C corporations, S corps allow profits to pass through to the owner's personal tax return, similar to an LLC, so avoiding the dreaded double taxation. But unlike LLCs, S corp owners can potentially save on self-employment taxes, right? So let's set up a scenario and go through it. All right. So you're like I mentioned before, let's say your company makes 300K in profit, right? You, the owner, take home 100K in salary. So let's kind of talk about what that means. So salary versus distribution. In an S corp, the 100K take as a salary is subject to payroll taxes, including Social Security and Medicare taxes, so totaling about 15.3%, right? So let's kind of break down that math. So let's say your salary was 100K, your Social Security tax, which would be 12.4% up to the wage base limit. So that comes out to 12,400. And then there's Medicare tax, which is 2.9% with no wage base limit, which comes out to 2,900. Um, so total payroll taxes comes out to 15,300, right? Now the remaining 200K, which is what the company made. So you took 100K in salaries, and then there was 200K taken as a distribution, which was the net profits of the business, right? As an owner, you're entitled to take that as a distribution. This is a unique situation um, for S corp owners, versus an LLC owner, because LLC owners only take distributions, whereas the S corp owner takes a salary and also takes a distribution. Um, but like I was saying, the remaining 200K can be taken as a distribution, but it is not subject to that self-employment tax. This is essentially where the significant tax saving comes in, right? So let's actually do the calculation for the savings. If your business was structured as a sole proprietorship or a partnership, then entire 300K profit would be subject to the 15.3%, right? So that would be 300K times 15.3% is 45.9, right? 45,900. So again, if you remained as an LLC that didn't file as an S corp, you would pay 45,900 on that whole net profit of 300K on your for self-employment tax. Versus if you did elect to be an S corp, right? Your self-employment tax on only the salary, not the full profit, is 15.3, right? And then the self-employment tax on the distribution is zero. So if we make this comparison, your tax savings with electing to be an S corp comes out to 30,600, right? This is that's the math, right? 45.9 if you were just an LLC with 300K in profit versus 15,300 self-employment taxes paid on your salary only. So with a savings of 30,600. You're a lot of people mention this. They talk about S corp tax savings. This is the actual reason that this exists. So this can basically affect anybody, and anyone can take advantage of this as long as um, they're kind of following some compliance things that comes to becoming an S corp. Like I'm going to briefly mention this here. So the IRS requires that the salary you pay yourself as an S corp is reasonable based on your role, right, and industry standards. So there's a couple different ways to go about doing that calculation. We do this for all of our clients to make sure that they're compliant in this area. This might be something you may struggle with if you're not doing this on a regular basis. I would suggest contacting somebody. And then if you're going to be an S corp, like you should definitely get a payroll company involved. And I would I would highly recommend getting um, an accounting firm to work with you, right? Like getting a CPA to work with you, accounting firm to work with you to make sure you're compliant in this area. Um, so, because it comes with some additional work. If you're going to be an S corp, there's additional compliance, and the IRS does look into this, right? Because they know that this loophole exists. Not, I mean, I guess not really a loophole. The strategy exists for business owners, um, but they want to make sure you're compliant when you're taking advantage of this. All right. So, yeah, I hope this helps. Um, next time someone tells you you should be an S corp, you'll know exactly why, if that makes sense for you or not. Um, if you guys have any questions, please leave it in the comments, or even comments or concerns about the way I'm presenting it. I would love to have a discussion about it. All right, thanks.